And in our top business story today, Dubai's private sector experienced a modest rebound across many key sectors in November this year. That's according to the latest Emirates NBD Economy Tracker Index. The latest reading of the seasonally adjusted index for the non-oil private sector economy picked up from 51.9 in October to 53.4 in November this year. Emirates NBD officials were quoted as saying that the improvement is expected to continue into Q1 next year. It was further mentioned that the strong growth in output and new work in the construction sector suggests that investment in infrastructure will continue to contribute to growth in Dubai's economy, despite lower oil prices. Some key findings of the index suggest that construction remains the best performing subsector, followed by wholesale and retail, and that the private sector output growth has accelerated from a 68-month low recorded in October this year. It was also revealed that the travel and tourism sector has returned to growth while experiencing a recovery in job creation. The Dubai Land Department has announced that they were able to revive 51 projects worth 12 billion dirhams under the Tanmir initiatives since 2011. According to a local daily, the Tanmir initiative was launched in September 2011 and was aimed at getting semi-government and private investors on board to get projects completed. Under the scheme, property investors were also given the right to register their stalled projects with the department. The Taysir initiatives, which are guaranteed funding initiatives, were launched in June 2010, and the DLD said that it saw 1,110 units completed, valued at 137 million dirhams. Currently, there are 8 organisations listed under the scheme. The report also added that the initiatives initially covered 40 projects across Business Bay, Dubai Marina and Jumeirah Lakes Towers. In order to qualify, projects must have adequate infrastructure planned or in place, an escrow account has to be managed properly, and technical reports need to show that a minimum 60% of construction is complete and a minimum of 60% of the project has been sold. Mashreq Bank has announced the signing of a $100 million syndicated medium-term loan facility for financing general corporate requirements of Korean-based SK Engineering and Construction, which is a global player in engineering, construction and maintenance services. The loan facility was approved by a consortium of regional banks, including Mashreq, Al Ahli Bank of Kuwait and Commercial Bank of Kuwait. Officials were quoted as saying that the loan facility is a part of the company's plan to proactively tap liquidity into the GCC financial market and represents an important advancement in the company's relationship with regional banks through availing loans for general corporate purposes. Meanwhile, Mashreq officials stated that over the last 7 years, they have supported over 12 key infrastructure, oil and gas projects of the Korean conglomerate in the region. And they are also equally committed to supporting its partners' efforts in strengthening the regional economy.